electric buses, I think also on electric bicycles and all that. So there's a push towards electrifying the automotive industry, which again I think will take time, but I think it's all in the quest to try and reduce the emission levels in the country. So again, that's why because again, if you have a car 7 years old, it's still not very old, too old enough to be able to have a certain number of emissions. There's a way they classify them: Euro 6, Euro 5, Euro 4, all the way downwards. So the Kenyan right now, most cars we import are Euro 6, meaning they have a very low level of carbon emission. So I think those are the two issues why we have such strict laws.
Awesome.
Yeah.
Back to you, Mr. Muthogo. Allow me to ask, how powerful are Kenyan creditors?
In what way?
How powerful is crediting? Let me put it that way. How powerful is crediting in Kenya right now in terms of what the government is trying to touch on credits and loans and the banks and stuff? How stable are we right now before they can even touch us? Are we strong enough? Are we good creditors? Are we good debtors? Do we pay our debts?
Okay, let's do both. As a country, yes, we are still paying our debts. So we're not defaulted, and we're not going to default. Now coming to the individuals.
Yes.
Because see, whenever the macroeconomic conditions become tough, whenever the interest regime goes high, like now, the effective rates are north of 20% for any, be it a mortgage, be it whatever, north of 20. Then we are now at the loans at risk. Using official figures is about 700 billion against a book of about 4 trillion. So it's significant. Now, why is that? Is because, of course, if you took a loan or a loan was given out to you, the conditions at that time made sense for the bank to give you the money. Those conditions have changed. That's the same way COVID came and changed all the dynamics. Now, you have a loan in the bank, you have to struggle to how you're going to pay or how you're going to restructure or if they're going to sell whatever needs to happen. However, even in those times, not everybody suffers in these conditions. Even COVID, the guys who are selling sanitizers, the guys who are selling masks, guys who are selling oxygen, and guys who had funeral homes, all those guys did not complain.
Of course.
Yes, in fact, they silently wished it had gone on for longer.
You're actually almost touching on my next question.
Yes,
continue.
So the thing is, in any in any business situation, in any reality like this, you have to position your business in such a way that, as they say, when the wind changes, if you want to continue going where you're going, you have to change you have to reposition your sail. Even for banks, they will still lend even now they're lending, but they are very choosy. So what we are saying is, in credit, there are two aspects: price and access. The price has gone up, so the access also has been affected because people give priority to access over price. That's why I see people will take digital loans at ridiculous rates because it's accessible. Price only comes in when now accessibility is no longer an issue. If I know I can get credit, then I'll start asking, where can I get cheap? But right now is, where can I get credit? Not how much is it? There's an app, download, yes, terms and conditions accept. And you don't even know if you accepted. What are you being given the money? So to answer your question, yes, the credit is not as strong as it should be in terms of the person lending out. They are a bit restrained, especially the bank has been the biggest. But remember, source of credit at the consumer level, do you know the person who gives the highest credit mostly, apart from digital lenders, or rather who are significant, are also kiosks. That book people write, that thing is huge. So even those are suffering because they have given out some goods and they get paid. Sure. So it's all about that cycle because you've not been paid, you owe me, so you've not paid me. Even me or somebody, they have not been. So the chain goes that way. That's what happens. So when that big payment comes, there's a trickle down effect. He's paid,
I'm paid. All right. But still on you, now that the finance bill is coming to play, do you think it will help in any way with that chain that is already there? Will it make things worse? Will it make things better? Will it stabilize at least things? It's just there, no change, no difference.
You see, in any dispensation, there are winners and losers in the broad term of those words.
Yeah.
So it depends on who you're dealing with. If you're dealing with a winner, you'll be fine.
Who is the winner in this?
Now that is a long conversation because you would have to go clause by clause and say this clause affects this person. This way it affects this other person. Actually, that's how you analyze. This is the meaning of this clause. This is the financial implication. This is who it hits. Then you go to the next, and you can see how big that bill is.
Big, yeah.
Yes. So you'll find like now I've seen the VAT threshold has gone up from 5 to 8 million. So, no, but you see, I think we also have we need to train ourselves to also talk about the good things. Because it can't be that this bill has no good thing in it. It is not true. But again, because of sensationalization and wanting to sell news, will go the bad news way. So there are good elements in that. As I'm saying, depending on how it has been, like if you look at now, the DST has been taken out. Because DST was based on income.
Yeah.
Now we're going to be based on profit, which is a better way of doing things.
Yes.
See, that's a win. You see, that's a win because you're saying, now you're going to pay corporate tax like everybody, because that's what it is, 30%, just like everybody else. So you guys do your profit and loss, this is your profit, this is what you tax. Previously, your tax income. When tax income is very tricky. Yeah, when any tax is based on top line, it's normally very tricky because it takes it off the top. But it takes it off the bottom, it means now after, mkifanya zote, then nagawana huku chini. This one tells you, ukipata hivi nipatie yangu wewe, whether you'll be able to finish the rest, that is your problem. So some of these taxes, yes, there may not be harmony in some of them, but I think the objective is good. And that's why you see over time, you'll always see amendments. Like even the last tax, the finance bill, some of those things are not implemented. Because when we went to the ground, they realized, no, this thing will not have the effect. Because see, at the end of the day, a tax has a reason why it's put. Even if it's to raise income, they also have to look at the economic implication. Because you see, if it's subsidization, you mostly subsidize production, not expenditure. You always never subsidize consumption. Subsidize production, and even when you're taxing,
I love this quote.
and even when we are taxing, you see, mostly you tax expenditure, and the more the indirect taxes, the better, because those are you get them all. The fuel we all pay for as long as we drive. There's no escape. Just like this one, the insurance tax my brother was talking about. You see now, the insurance companies have become now collection agents. So you can't escape because how do you drive a car without insurance? And the insurance person will tell you, mimi sasa ini 3 lakini pia kuna 2.5. So ni 5.5 na zinalipwa zote pamoja. So you see now when you're cornered like that, they know that all the people will cast because they have the data will pay tax unless useme gari yangu hii mwaka imepark. That is the only way you'll escape. But for as long as you're going to insurance, I wasn't buying. In fact, it's the same way when you go to buy water. You don't know how much of it is tax, how much of it is duty. The 60 bob. Lakini Quick Mart will subdivide. They know who to give this. But if you look at your receipt, it's all broken down there at the end. So it will be the same. Mtoka mnaambiwa bei moja. Ni 5.5. So insurance companies, some of them might want to push now. It might end up also affecting the premium rates. They may have to give up a bit just to keep this thing affordable because they know now for them to sell, they must make the whole thing affordable because it's take all. You can't take them in fractions.
Business is sweet. Now back to you. There's a clause I started reading. Let me finish it and then I'll ask you a question about it. Insurance companies will be responsible for collecting and remitting this tax within 5 working days.
Yes.
Sorry. Insurance companies will be responsible for collecting and remitting this tax within 5 working days after issuing an insurance policy. Non-compliance by insurers will result in penalties amounting to 50% of the uncollected tax plus the actual uncollected amount. Exemptions to this tax include ambulances, vehicles owned by governmental bodies like the Kenya Defence Forces, National Police Service, and those owned by individuals protected under the Privilege Act. My question comes back to the 50%, the non-compliance by insurance, that is the 50%. The insurance companies will be responsible for collecting and remitting the tax within When we say non-compliance by insurers,
yes,
are we talking about the insurer? We're talking about the insurance companies, right?
yes.
What if I, the buyer, I'm not willing to pay whatever you're selling? I'm not willing to buy whatever you're selling. What happens?
See, now that I don't think we have a choice, as he said, because really, then that means you won't be able to insure your car.
Yes.
Because really, it will be part of the charge. You have to pay it.
So of course the government is coming for the money from the insurer.
Yes.
But now at the same time, the reason why I say business is interesting, I want to keep my customers.
Yes.
I want to maintain, to sustain my customers. My customers are complaining the money I am charging them is too much.
Yes.
So they are willing to give me this. For example, they're willing to give me 200, but if I add what I'm supposed to be getting, the insurance I'm supposed to offer them, and plus what the government is giving, I cannot even give them anything less than 700 shillings. And my clients are like, no, we have 200, if you don't want, we're out. What happens to such an insurer?
So what happens to the insurers in general is, I know, of course, if this passes, most insurers will lose businesses. And of course, business in terms of, because people really need their cars. Again, you bought a car because you need mobility. So at the end of the day, as I said even earlier, is people will go down from comprehensive insurance to something called the third party. Because the third party, I think, per car is usually around 5,000, 7,000, sometimes even up to around 10, 12, depending on the car you're insuring. So people will have that particular drawdown so that they can be able to reduce their premiums. Because again, as Abraham was talking about it, we don't really have a choice. It's something we have to pay, because for you to insure that car, that's like a prerequisite to it.
You as a car dealer, are you the one who suggests the right insurance or the right insurance for such a car? Or you just bring your car and you're like, that is your car, insurance is on you, I did my part?
No, we actually suggest, we have partnerships with various insurers. Of course, depending on the vehicle that you're buying, we know which covers will be able to sort you out. And I'm looking to see how that relationship will particularly go when this bill passes, or if it passes. So I'm looking to see how that relationship with the insurers will go. But of course, we usually recommend insurers to our buyers.
All right.
Yes.
That is the end of today's session. Sadly, we have to end it there. This is a broad topic. There's so much more to be said. I still have billions of questions to you and to other panelists, but I will ask them when Fred Jiri is coming here at 11:30 a.m. He will be having his own panelist. He will have his own panel discussion here, and then Belinda William will also have hers. Katika lugha bora na tukufu ya Kiswahili, nitajikaza nimuulize maswali mawili matatu, and then at night we will have Cynthia Nanjala from 9 p.m. to 10 p.m. It's a roller coaster of the finance bill, so I will allow you each to say your goodbyes, your shout outs, sell your business and stuff. This is it.
All right, let's start. So thank you very much again for inviting us. I think for me, I'll just say that let's look at this finance bill in a general term, both positive and negative. And yes, let's continue buying cars, of course. Look for me, my social media handles, Emmanuel Irongo, you'll find me there. Yes, we need mobility, of course, so we have to continue buying cars. Yes.
Thank you very much.
I think for me, I think I like what you said. I think let's give to Caesar what is Caesar's.
Yeah.
And I think let's develop the culture of paying tax. Because it is not fair, and for you to consume goods you're not paying for. Okay. Yes, public goods are goods and they are being paid for by someone else. So you also need to pay, because you're using for those parts, you're using those goods. The discussion of how that money is used, it will come. It will come with time. Exactly, the structures are there. The strength is increasing by the day. So we will get where we want to go. But that does not absolve you from evading tax. No, that one. So, because let me tell you, and for a fact, if today, Kenya is about 90% SME country. If everybody paid their taxes
properly,
this budget would be child's play.
Oh, yeah.
I can say it here. And I would like anyone to challenge me. It is true. Even just that River Road, Kamkunji, and Kampisli. Just those three places. If everybody paid their taxes, supposed to be there, it would be sorted out. So, and you see what happens when everybody complies. What will happen? The government will have more money than it needs, so it will start reducing tax rates. Yeah, because the government is not, but it's not being, they're not punishing anyone. Yeah. It's just that they need to do what they need to do. Yeah. But the thing is, the people who get battered the most are the formal businesses and the salaried person. Yeah. And if you look at these taxes, they're the same. It's the same old culprits that they keep going back to. Yeah. So these guys who are there underneath, that's why you see now certain taxes like turnover tax, e-teams. You know, these things, they're going in slowly, but the time they'll crystallize, there'll be no escape. So it's better you know, sometimes it's better to do something on your terms. Yeah. It's just like death. You know you'll die. Yeah. So you can prepare for it, or it will just get you. Yeah. So the choice is yours, but it's not going away. So the same thing, and they say the only two sure things in life, death and taxes.
Oh, nice. Nice. All right, and that's the way we sum it up. This is, I almost said know your law. What? This is